Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's a day which is in stark contrast to what the US markets did, to be honest. So you have to be mindful of that. That the world markets, at least the mother market, is not as hunky dory as we would like it to be, or as the bulls would like it to be. Let me rephrase myself. However, let's tell you all about that. First, what the US markets did on Tuesdays, they were down about 1%, 1.5% for each of the key indices. So that is part one of the conversation. I think Nasdaq usually tended to outperform in an early part of the US market trade yesterday because of what Tesla was doing. Not Tesla really, but because of what some of the others like Apple, etc., were doing. Microsoft was doing. It seemed like the Nasdaq would outperform. I think all the markets have kind of come off lower from where they were during midpoint of trade. So not the best handover, and the US futures are flat. But Asia and the limited markets that started off mixed. You have to bear that in mind that we didn't. I mean, we there's a 1.5% downtick in the US markets. We don't have quite the similar downtick in the Asian screen, and that is something you have to bear in mind. They're flattish to marginally lower. So that is what Asia is doing. And therefore, that will impact sentiment on our markets as well. The SGX Nifty, frankly, for now, is showing a number which is marginally in the green. So 0.2% or thereabouts is where the SGX Nifty is trading. So you probably have a start which is slated to be marginally higher in trade. Not bad. You would have anticipated that with the Dow down about 1.2% yesterday when we shut shop, that there won't be too many long position opportunities. Maybe there could be some. Now, there's one important thing that all of us have to keep in mind, that we've had a very stupendous rally. A lot of people have questioned, but we are no longer, we are not even close to what some of the top performers in the EM and the Asia Pacific region have done. From February, I'm taking February as a reference point because that's where the conversations around the virus started. Right now, see that and see the reversion from the lows. Now, these are four indices that I've chosen today: Nifty, Brazil, the Shanghai Composite, as well as the Taiwan stock markets. And you will see that the purple and yellow line, which is the Taiwan index and the Chinese markets, are by far outperforming the others, which is countries like Brazil, Nifty, etc., India, etc., are in the bottom five. And it clearly shows that there is some room to go. Now, you could argue it the other way too, right? That these are the countries wherein the virus is rampant, and therefore lockdowns will be more stringent than what's happening in China and Taiwan, and that is why this performance. And I think that argument also holds water. So it's a difficult thing. We are no longer at 7,500 where you can make a bullish argument that everything is in the price, but we are nowhere compared to what some of the other markets have done. And that's why it makes it slightly difficult. What also makes a bearish call on the Nifty difficult is the Bank Nifty, which is now shown a bit of a breakout in yesterday's session. Frankly, if you saw the move yesterday, it did seem that there was a bit of a breakout. And if indeed the IT companies provide some support, it could actually be good stuff as well. But the Bank Nifty could really provide support. Keep in mind, viewers, I have a statistic for you. The Nifty BFSI is still down 27% from the Feb 2020 levels, whereas the Nifty XBFSI is down just 1% below the Feb 2020 levels. So you know the kind of disparity that the banks are showing versus what the rest of the market is doing. And if the Nifty is given a breakout, could there be some resumption of gains, and could that help our markets? That's the key question, really. That's the one key question. If you can answer it, well, you can be a millionaire. Well, I don't think I can answer that. Let's wait and watch. But the Bank Nifty gave a bit of a breakout. Let's see if it continues. What about stocks, though? Stocks that should be monitored in the session today. So to my mind, the stock of the day is Titan, and for the wrong reasons. Now, it's a solid franchise. I know there will be buyers at lower levels, but I do think that the Q1 FY21 update was a bit of a disappointment, really. They've reopened 83% of all the stores across all businesses, which is great. But the production levels are low given the inventory situation that they may have. But the other worrying part is the updates that they've given. Jewelry segment, and I read it out, the jewelry segment revenue in the month of May and the June months at below 20% and 70% levels on a YOY basis. Now that is quite low, really. It shows what the company would have done in the April, May, and June quarter, and June is still only around 70% for jewelry. Now look at the others, watches and wearables. They don't form a large part of Titan's portfolio, I know, but I'm still putting out those numbers there. 5% in May, 20% in June. That's for both watches and wearables. And that tells you a story about how the Indian consumer has not flocked back to retail in the same fashion that the global consumer has. So don't look at stories of how global retailers are all moving up and therefore Indian retailers could do the same. It is looking very different. And if it's happening to Titan, I can assure you it's happening to every other retailer except for the FMCG and the staples retailers. So you have to bear that in mind. I would reckon Titan would start off lower today, and therefore, to my mind, it could be the stock of the day. CLS has come out of the sell. Some of the other brokerages have expressed the neutral rating, but the commentary looking soft. Let's wait and watch how this one shapes up. Zuari Agrochem, again, it's not as much about Zuari Agro itself that I'm pointing this out, but because of the fact that what's happening to Zuari, which is an organized player, they have had to shut down an NPKA plant due to worker shortage, non-availability of bagging workers owing to COVID-19. Now, keep that in mind. If it's happening to the organized space, it could be happening in the organized space even more. And therefore, you have to pick and choose. What's happened to Zuari today could well happen to some of the other companies as well. And after 3 months of a lockdown, if there are plant shutdowns happening, it tells you a story. It is not all hunky-dory out there, viewers. Keep that in mind. Reliance Industries, though, all hunky-dory for this one. Geo Platforms, 10% stake sale to Facebook has been consummated now, which means the amount has been received. They have received about 43,600 crore rupees from Facebook. So the transaction is over. And to my mind and to everybody's mind, this would pave the way for the other transaction to be completed soon as well. The remaining transactions to be complete. Actually, the remaining transaction to be completed soon as well. So more money could come in. I think the Geo AGM, Reliance AGM on the July 15 could well give us some more insights into what Geo is thinking. So you have to keep that in mind as well. I think this is an important stock. Everything is going right for it. And ICICI Bank fundraising exercise today, and that's why this remains a stock in focus. It's a big one. Typically, fundraising for a BFSI company is good news if they manage to do it successfully. It brings down the book value as well, or therefore the price to adjusted book value, and therefore there could be some more upsides if they indeed manage to do this successfully and at a good price. So let's wait and watch what happens in the board meet today. Keep this stock at the back of your radar. As I said, bank Nifty's anyways. What stood out for me though, amongst other things, is this very interesting chart on Bloomberg, which showed, amongst other things, how Nasdaq, uh, the performance inequality in the equal weight index versus the Nasdaq 100's record-setting move, which clearly shows how a large portion of these top 5, top 6, top 7 names have done just so well and continue to attract attention that is left some of the others within the Nasdaq index also behind. And that's quite a telling statistic. In the best performing index, if you are in the TRI version, somehow the equal weight version really, then it would have not yielded as strong gains as what Nasdaq has done. So, well, you win some, you lose some. Thanks for tuning in, viewers, to the Trade Setup today.